the use of the term bright spots is an interesting one in the environment we currently find ourselves in, because it's not what would come to mind in an environment where you feel that the governments and the companies are definitely thinking about how to deal with a lower oil price environment, and we clearly see very serious signs of credits deteriorating, and really a new paradigm of engaging with, I think, the capital markets. And I think an important need to develop local financial markets and financing options. Having said that, we also find that there's a lot of opportunity because the region continues to be characterized by a lot of innovation and a lot of growth. And I think when you add on top of that the new requirement for very significant financing needs and the uncertainty surrounding not just oil prices but the policy response to that, it creates quite a bit of uncertainty for many investors. And for a region that traditionally doesn't have a lot of dedicated investors, that means that there's quite a bit of opportunity for active managers. And so what we find to be the biggest difference between the environment we're in now versus the environment we maybe were in a few years ago is that you need to really dig a little bit deeper today. There is going to be a lot of dispersion around the average. So if you just look at the average, it may not look as attractive as it once was, but there is going to be quite a bit of dispersion, a lot of difference between the different issuers and credits in the region. And that, from our perspective, makes it a particularly exciting time. So the real estate market continues to be one of the sectors that I think culturally the GCC likes. That, coupled with equities, has been where you find that there's always quite a bit of appetite, quite a bit of excitement. And the programs or the events that you referred to certainly are commanding quite a bit of attention and are triggering quite a bit of investment in the lead up to them. From our perspective, however, on the bond side, we've always argued that people need to diversify away from those two asset classes. And we find that the environment we're in today probably favors fixed income over the others, in the sense that financing is a little bit more challenged, the growth as a consequence may be a little bit slower. And so when you're in that type of an environment, it typically favors fixed income. I'm sure that there's some very compelling arguments for equity and real estate, but from my perspective, it's always better to focus on the fixed income and the Sukuk side of things. From a philosophical point of view, it really comes down to research. So much of what we do is really based on fundamental bottom-up research, that we have a very intensive process, really driven by the need to have it, because I don't think it's being done in general. We also operate in an environment that doesn't have the highest standards for transparency and governance, so we need to mitigate that somewhat. And given just the stage of development, we know that it's not a very large universe at the end of the day, and so we will have concentrated portfolios. So for all of the above, our investment process requires that we have a very rigorous, research-intensive process. So philosophically, that would be my approach. Don't take anything for granted. The market is changing. With growth comes a lot of credit migration, and one needs to be careful and one needs to do their homework. Thankfully, we have a fairly large team to do that, and there's no shortage of talent in the region to help accomplish that. So broadly speaking, the GCC has embarked now for a number of years of integrating, I think, with the international financial markets. And you can see that in equity markets moving from frontier to emerging market status, and more recently Saudi Arabia finally announcing that they intend to open up their equity markets. But progress inter-region has been slow, and I'm not so sure is maybe moving along the way that people envisaged in the past. And second, I would say that the bond markets are still considerably behind the equity markets in terms of opening up or actually being established and promoted by policymakers. So we feel that there's a lot that needs to still be done. And we've been a voice, along with, I think, bonds and loans, arguing that much needs to be done by policymakers as well as market participants to develop fixed income or bond and Sukuk markets. And I think we've made some progress, but the journey is still ahead of us.